Spotware is a European software development company that specializes in online trading systems for all sorts of asset classes and investment vehicles. Spotware has just launched cXchange, which is an out-of-the-box solution for any business to launch a digital asset exchange. We talked to James Glyde, the company's chief commercial officer, who was instrumental in the product planning and development.
ICO, what a misleading acronym. Basically because it's so similar to IPO, initial public offering, yet the connotation of that might seem similar. It's such a different thing altogether.
Yeah, and I believe by having such similar acronyms, it actually misleads investors a little bit.
I think it does, absolutely.
I think the acronym was made in that way, but the thing is, they're two completely different things. You can't compare them at all.
That's right.
An initial public offering is like a bona fide company which is already making money, it's already got investors, it's undergone all of the due diligence of an exchange and the regulator of the exchange as well.
Yes, even before it lists, and it's got shareholders for a long period of time
who've undergone background checks.
They have indeed. They've all been vetted every year because they have to submit their annual reports.
Yep.
Even if it's a privately owned company, they still have to do their filings every year.
Yep.
The company has got a viable product that's obviously led to success and monetized the company over a period of time.
Absolutely.
And only then is it time to look at going listed. And of course, that's, we were talking about this a few times, and I think it's really important that everybody really looks at this carefully.
And because of that association, you think that an ICO must also be a safe thing to invest in. But really, these are just new ventures.
That's right.
They're just ideas that people have.
Exactly, they're ideas. Some of them don't even exist yet.
Yeah,
and may never exist.
Yeah, exactly right. So people invest in good faith, thinking, okay, maybe I don't have the resources to access a stock market. Maybe I live in the wrong country. Maybe I just can't get access to a broker who can get me into this. So ICOs are far more accessible to people, and they just assume that they have the same principles. But really, an ICO is just a new venture.
It's a new venture.
So
it's a new venture being funded by members of the public.
Yeah, like just peers. It's like a crowdfunding thing.
Yes.
And my opinion is like a real company that is, a private company who's establishing itself for its own gain and its own profit should find private money or invest their own money and undertake their own risks and not call out to the public to actually invest in their idea. If their idea was so good, then they will put their own.
That's absolutely right. I had a discussion years ago, before even any of this retail electronic trading came to light, and I'm talking right at the beginning of my career, nearly 30 years ago, 27 years ago, with a bank executive who invested in commercial enterprises. At the time I was programming bank trading services. This particular department was a commercial banking division that extended lines of credit to commercial enterprises.
Yeah.
And they used to come to the bank. Some of them were quite large, and they were existing businesses. They weren't like the ICOs, which don't exist. They were existing businesses who wanted to expand. Come to the bank, I'd like a loan, please. What would you like the loan for? Okay, for this. How much of your money are you putting in? Was the very first question the bank would ask.
Exactly right.
And if the guy said none, then he'd show the door.
Yeah, exactly.
Right, and that was 30 years ago. So what's the difference now? And why there's so much of a placebo effect of the association between ICO and IPO that people feel comfortable handing over their money because they think that it's the same as an established company that's going public.
And these websites, like every white paper, every website, all they do is they just emphasize the future. They disguise the real reasons.
That's
you know,
right.
They just want to raise capital, but they say that they're doing it in using this strategy because they're leveraging the future and new technologies that are available.
It's very easy to say things about the future.
Yes, of course. But I'm going to name things how I see them, okay? Like, it's not my position to say what's right and what's wrong. I think these are good ideas, and I think that people should take advantage of these new opportunities. But calling it an initial coin offering is just wrong.
It is, yeah.
It's a venture coin offering. This is a new venture. So we need to change this acronym and not call it something associated with something else.
Yes.
It really is a venture coin offering, and you're raising capital for a new project. And even more so, like ICOs or VCOs, they make sense when you're talking about a project which is like open source, like for the greater good of the community. And it's not a private enterprise where actually the people who started the idea, not the people who invested the money, but the people who were like the brainchild of it, they're the ones who truly benefit. And then there's also people disguising it as a utility token, like, an early access.
Yes.
In some ways it makes sense, in other ways it doesn't make sense. But as I said, I'm not the person who should say what people can and can't invest in.
But especially now when multi-asset, when we're starting to use the word multi-asset as a benchmark for electronic trading platforms, whereas that never used to apply to anything apart from listed derivatives exchanges. Multi-asset in the traditional sense refers to futures on listed exchanges.
Yeah.
Now retail traders want access to multi-asset, and I've been speaking to many listed derivatives platform providers in Chicago, which is where all of them are, because they're providing platforms for the Chicago exchanges, CME and CBOE and things like that. Yeah. They are also going towards the retail space now, because the retail customer wants a multi-asset solution.
Yeah.
So it was traditionally very expensive, and now it's not. So some of these particular digital exchanges now are providing a multi-asset solution for low cost to retail investors.
Yeah.
That, in my opinion, is the similarity between electronic trading and the crypto world, which appear to be two separate things.
Yes, and the crypto world is becoming more and more accessible to like traditional types of investment, like you said, futures. Futures are even more complex than exchange trading.
Yes.
And the fact that cryptos are a lot simpler, they're a lot more accessible. This is why people are embracing it, and I think that is amazing, and I really want to be a part of that. And the problem is that people take advantage of that easy accessibility.
Yes, they do.
And when I say accessibility, some exchanges don't even do KYC on their clients.
That's right.
They just need a verified email address, and I think that's wrong, because there is a way that these tokens, these coins, they still value because people bestow value into them, which means that they can be used to disguise money laundering activities.
They can.
And I think just having a stance and saying it's not real money is a valid stance, It
is, but that you're coming at it from that's very interesting. You're coming at it from a very pragmatic point of view, because you are coming from the senior level of the technological development aspect for the genuine electronic trading industry.
Yeah, a very regulated industry.
Very regulated industry, and the technology that provides this to retail traders, platforms and integration services and prime brokerage and so forth, is something that's your background. So in many cases, ICO and crypto ventures have not been founded by people who come from that background. So they haven't thought about how does a platform...
Enthusiasts, people who are enthusiastic about the technology, they want to make it accessible to people, but they're not thinking about the long-term picture or the bigger picture.
And as a result, you're thinking about it from a trading platform perspective.
Yeah.
KYC, how to integrate a live market and a pricing engine, just as you would in an electronic brokerage, whether that be
in an exchange,
or exactly an electronic exchange, or an institutional ECN, that kind of system.
Yeah, similar to this.
Similar to that. Whereas a lot of, as you say, a lot of them are enthusiasts who have come in with an idea that want to make a sort of future of money, so to speak, which is all very well, but it doesn't come from the background of thinking things through clearly.
Yeah.
The other problem, which is worse, is affiliate marketers and digital marketing people, young people who don't come from anything apart from SEO and digital marketing, who are seeing the word crypto and ICO everywhere, just gathering web presence and bringing investments in, and in the end it ends up being a massive Ponzi scheme. Because there's no product at the end of it.
Yeah.
That is very much insidious, and the problem is the loudest noise made by that is the noise that people hear.
Yeah, that's the thing, is about being a leader. Like, this is what I'm trying to achieve. To be a leader and to bring great minds together and have a vision, okay? And you need good marketers to be able to get your name out there, to be able to get the brand in front of people. But the thing is like, people who are entrepreneurs, especially like digital marketing, SEO people, they just go at it the wrong way. They go for the quick money.
Yes, they do.
But they're using good strategies.
Very good marketing strategies,
yeah.
But the substance behind it hasn't been thought out the way it would, often in many cases, by somebody who comes from a technological development background in exchanges or if you look at most of the integration companies that exist today that integrate retail platforms into the live market, most of those executives who run those companies have been technologist exchanges, they've been senior executives in large institutions, programming.
You can't go from nothing to something and be a leader of and that's the thing, because it's a very immature market. Someone who's been doing this for 1 year or 2 years, they're an expert, and they're seen like this.
That's right. There's regulation's interesting because again, the regulators don't understand the modern marketplace. They don't really even understand most of it. The only one that does is the United States. The rest do not, because they are not law enforcement agencies. They're not public. They don't make public announcements about things. They are basically civil servants who make a framework, and that's it. So what you have is now a mature retail electronic trading industry, which has been probably in existence in its current form for the last 15 years. Ever since MetaTrader 4 was invented, that's when it started to accelerate. Before that, you had
the accessibility
was much easier for 15 years ago.
Yeah, and 15 years ago, this market was like how the crypto market is today.
But still today, the regulators outside the US don't understand the electronic trading industry at all.
Not at all.
Not at all.
For me, it doesn't make sense. Like, let's take ESMA or the FCA. They cover so many products, everything from credit cards, from insurance, and then a very small niche like CFD trading, online trading. They think that they can, like, one body can be expert in all of these different facets of finance, you know?
And most of them are, as you say, most of them are from a financial or accounting background. They don't come from an electronic, digitalized trading background.
Not at all. And we actually saw something like this recently with ESMA. They think that by cutting leverage on margin trading is going to protect investors. No, it won't at all. Like, it needs to be approached in a different way by people who actually understand the industry. And if you don't understand it, then no thanks. I don't want your help telling me how I should run my business.
Actually, in the United States, that is the only country where the actual regulation for the financial markets has been structured in such a way that suits the electronic trading industry, because the electronic trading industry in America is what forms the financial economy there. You have the prop shops of Chicago, the exchanges which are serving the world's listed derivatives. You have a diversified technology industry which focuses on electronically traded asset classes. So the CFTC and the SEC and the NFA understand how this all works properly.
Yeah, and they've it's been split up into 3 different agencies that understand the specific assets and the specific markets that they're regulating.
You have commodities for the CFTC for commodities, SEC for exchanges, and the NFA for the futures industry.
Exactly right.
So basically, they have been the only ones so far who have gone to the cryptocurrency and actually understood it and regulated, defined specific actual descriptions for each type of crypto activity.
Yeah.
That's what they've done, so that's a good thing.
I agree with that, and I really hope that some regulation similar to this framework is going to come in that can actually apply to us and help us with what we're trying to do. For example, if a competent authority which doesn't have the experience comes and tells us what to do, it's going to be disruptive and it's not going to protect our clients. Like, we know better how to protect our clients. It's in our own self-interest to actually be able to do this. If we don't protect our clients, then there is no longevity in the business that we're trying to run.
That's right. That's the thing that's missing in a lot of, and you're absolutely, it's the longevity that's the issue here.
Yeah.
In the unregulated sector that this particular sector works in at the moment, those who come from your background or my background, or people who've worked in this industry for a very long time and understand the technological infrastructure behind it and how to actually execute orders and how to actually structure an exchange or platform to execute those orders according to market values and use a matching engine, that kind of technological topography will do it that way.
Yeah.
Because they're interested in longevity and developing an actual structure for trading.
Yeah.
Whereas those who come from a digital marketing background or a affiliate lead buying, lead churning, selling leads to other people and then trying to pass it off as a product that will never exist, longevity doesn't come into the equation there.
No, it's just the next fad.
It's the next fad, quickly grab the money and run away. So these two things have to be looked at completely separately.
And these are exactly the type of people who have caused a problem for our business.
Yes, they have.
Google, Facebook, they look negatively at the whole industry.
Absolutely.
Because
yesterday there was a big difference with Google now delisting a lot of advertising from their ad network.
Yep, exactly right. And this is another reason why regulation will actually help. Because if I have regulation, I can turn around and say, look, here are my credentials, you can trust me, I'm an honest business owner, and I'm doing the right thing.
Yes.
And anybody who doesn't have that, or can't find some other credibility, some proof point to be able to show to someone like Google or Facebook that my business is legitimate, what I'm doing is not criminal, and then they can actually use these very important services because Facebook and Google are huge companies. And everybody relies on them every day.
Right.
Like, you can't advertise without these two channels.
No, you can't. And you need Google. You can do direct advertising, but Google's actual ad network is now asking companies to provide exactly that information to justify why they need to be on that ad network, and to look at the structure of their company. I think it's really important to have accessibility to these services, especially what should be done is some kind of differentiation between, again, it goes back to what you're saying about the acronyms being misinterpreted. If you've got a Google and Facebook which is generic, they're going to fill those ad slots with something else. They don't mind.
It's actually a very interesting stance, and actually I think kind of cowardly. It's like saying, I don't understand what this is, so ban.
That's what it is. Well, that's what the Belgian regulators did to CFD and FXAD. That's what instead of actually categorizing things,
thinking about what it is, like what does this thing mean? What are the risks? It's just like
almost like the lot.
I don't understand. I can't be bothered.
That's
ban.
right. That's what they've done. But Google doesn't. For a regulator, it's even more insidious. But for Google, it doesn't matter because
they're a private business. They can do what they want.
They do what they want, and they'll fill the slot with something else. I still think somebody's responsibility. It's not Google's responsibility. It's because they're a private. They can say, okay, we're not taking these. We'll just fill it with something else. But it's our responsibility in this industry. And I really mean ours.
No one else is going to do it.
Nobody else is going to do it. It's the industry participant and the industry-specific media's responsibility to categorize and make distinctions between genuine and non-genuine and types of product. That way we can then make sure that is what Google and Facebook and other things, even the competent authorities look at when they're categorized. They say, okay, this is an exchange with a centralized counterparty. It works in this. You can start to hopefully hear exchange regulators and media talking. We're using industry terms. We need to lead that.
Exactly right. And I really hope that something will be done about this, even if it means having to do it myself.
Yes.
A self-regulatory body would be a fantastic thing. If we all get together with the media who are engaged in this industry, with the other participants, no matter what market they're working with, whether it's B2B, B2C, some added value service, some exchange, if we all get together, we can actually influence regulators and make sure that they don't do something that's going to smother our business.
But we should be influencing to do that, so they don't smother our business, but also at the same time so that they can categorize between what's insidious and shouldn't be part of our industry.
And we can help them to categorize what should and shouldn't be allowed.
That's right. It is actually a crypto mobile first cryptocurrency venture, which has been actually brought to fruition by the mindset of people who come from the electronic trading technology sector.
Exactly right. And this mobile first positioning is a very, very strategic decision. I saw firsthand the huge, colossal uptake of people trading on mobile devices. And this is like mobile trading on cryptos is something which is just not being catered to by existing exchanges. They've maybe tried, they've not done it well enough, but this is something where I specialize in. And I'm going to go to the market with a mobile-only crypto exchange where the entire customer lifecycle can be supported just from a mobile app. This is how people interact with the internet now.
It is nowadays. Desktops are a thing of the past, really.
Exactly right.
If you look at it, I'm in my 40s, but even my generation, if you go into most people's house who are in even my generation, I'm not talking about millennials, I mean Generation X like me, they don't have desktops even. So no way does anybody under Generation Y or millennials, they certainly don't have desktops.
And you know
Everything
what?
is mobile.
These days, some mobile phones are more powerful than laptops and desktops as well.
Well, funny enough, if you go back to 1992, 93, the IBM middleware server that was powering most of the bank prime brokerages, which was as big as this room, huge, and generated tremendous heat, needed almost a commercial refrigerator, the sort of thing you'd see in an abattoir to cool it down.
And now that same stuff can be done in just a couple of racks.
Even less. I'm sure that server is less powerful than a modern iPhone. So
probably right.
That's now the situation we are in. No infrastructure, no physical infrastructure, everything app-based and all on the mobile.
And now we've been working with mobile devices for such a long time. We understand how people use them. Like, the small screen size doesn't matter anymore. It's just about having proper UX, making sure that people can actually use the functionality of the trading platform.
You've got a lot of brokers. I actually was meeting here in Cyprus just now a technology provider that provides ancillary services to brokers. And one of their concerns is it's all very well making very well developed software that integrates really well with trading platform. But remember that the companies are doing it, as you know, because you are a specialist in this, are specialists and programmers, and they know this. But most of the time, small brokerages, they have maybe one IT support person who's an internal support person, not for the trading system, because that's done by a third party.
Yeah.
But the actual CEO and the actual owners of brokerages are not technologists, they're financial professionals.
Yeah.
So the last thing they need is a technologically bamboozling user experience, because they just want to power it on and start using it.
Yeah. Simple works best.
That's right. Simple front end and a very well organized rear end. That's the responsibility of the tech provider.
Right. Matching engines, like what goes on behind the scenes in the server. This is really complicated stuff, but you do not need to bother people with this.
That's right.
A smart, intuitive mobile application is all the investor needs to needs to know about.
And actually, that's a very interesting point about matching engines. That is something which is now a moot point among. There's been a huge problem, so to speak, with lack of cryptocurrency liquidity.
Yeah.
Recently,
especially in December when it was all a one-sided market, people buying and holding. No sell liquidity at all.
No.
Therefore, the price just grew and grew because very few people were selling.
That's right.
More people wanting to buy. It was very concerning. Like that was at the time when we started building the matching engine, started building this new business, and it was a big concern.
It shows you quite a lot that, because in my opinion, the CME Group put out their PR at that point, and they with absolutely nobody really realised whether there was any intention of any Bitcoin futures being listed on CME. It was a PR, but the whole investment world went completely nuts.
Yeah,
and this just on the whim of a PR that may not even come to fruition. Obviously, it did come to fruition, but much later.
Yeah,
and the reaction caused all of this lack of liquidity. So to have a problem like that just from one or two events that aren't even in existence yet is very worrying. So to be able to build a matching engine that works properly under those circumstances is not something that's on everybody's agenda. Actually.
No. And a lot of exchanges struggled with this, which means that you have to be very smart and you have to think about all of the different things that can happen. Because this was like an unprecedented event, basically.
Yes.
And none of the existing exchanges were equipped for this.
It's terrible because, you could, let's say you are a market leader in a traditional asset class.
Yeah.
And you don't want some new phase or phenomenon taking your business. You could just put out a PR and then just blow everything up, because that's how fragile it was at that particular point.
But I don't know. My opinion is that actually they were embracing a new asset that they could list on their exchange.
Yes.
And I think that's fantastic.
I do too. It wasn't particularly them doing that was the problem, but launching a PR that made everything go into turmoil demonstrates the fragility of
kind of, things. It's a very news sentiment based asset.
That's right, it is.
Things go up and down based on some loose regulatory announcement, some senators, drunken ramble, someone's Twitter post that can shake the market.
Yes, absolutely, it does indeed.
But this also makes it a great speculative asset to invest in. A great way, especially if you're interested in diversifying your asset, your portfolio of investments. It's a great opportunity for people who are looking for long-term gains.
Yeah, it is. I often wonder how a matching engine can actually be developed for that. I spent 18 years in the technology sector in institutions, so I saw bank matching engines all the time.
Yeah.
We were working on them. Me and my colleagues worked on them for years. But a crypto matching engine is something completely different.
Yeah, there's a lot of similarities, but at the same time, there's a lot of differences. Like with a bank matching engine, you're working with a very liquid market, which basically has infinite supply of liquidity.
Yes.
This is very different, which means that you have to have a lot of controls and safeguards, and there isn't always the best, there can sometimes be a situation where it's just impossible to prevent something from happening.
Yeah, it is.
This afternoon, here in Limassol, Cyprus, James and I decided to take a little drive. During that particular journey, we looked at how money originated and how its purposes today can translate into different asset classes. In fact, how it can be digitalized.
That was very interesting, James, especially to get a perspective on how you're going to bring your technological skills that come from the electronic trading industry into the new cryptocurrency arena. Very interesting indeed. But there is one thing that actually I thought of just recently, which is today, in today's electronic world, what is the purpose of money? Money, that might sound like a very broad and obvious thing to say, but actually it's kind of relevant right now.
So money, if you think about it, it has like two main responsibilities. One is to be able to transact, and the other one is to be able to like store value, so savings. So cryptocurrencies have proven to be like really useful for being able to store value for actually everybody, but more so for the unbanked.
Yes.
And the reason is you can store your wealth, store your assets in some cryptocurrency, keep it by your own means, not relying on any third party and trusting them to be the custodian of your money.
Right, absolutely, and actually that's happened in two circumstances really, in my opinion. Obviously somebody sitting in their living room in the Midwest of the United States is going to think, well, what's the point in me having bitcoins? Because the US economy is a first world, highly organized place where people are not afraid of the government, they're not afraid of their own bank. Things work very normal in a very diversified economy. But if you're unbanked, that's in a place where bank accounts are not the common thing, which, believe it or not, is quite a substantial part of the world these days.
Yeah, me and you, people like us, we might not think like that it is that substantial, but like from my research, I realized that actually it really is, and there is a demand for this.
It is indeed. And then you have other parts of the world where people are banked, they have a bank account, but the government is a despotic government where you have capital control laws and you have corruption, and the populace doesn't trust the bank not to plunder their savings. There's nothing they can do about it, just have the money out.
Yeah, and you rely on somebody else that you may not trust for the accessibility to your own money.
That's right.
Then the other important part is actually the ability to transact in your money. So if you can't spend money, then what is the point in even having it? Cryptocurrencies, like, they have a great benefit, they have a great potential, but right now being able to transact is a bit sticky.
Yes.
Because the uptake isn't the same as it is for like Visa or MasterCard.
No, exactly. Those merchant services providers, which have got commercial backing, are everywhere all over the world, except for in China where they have their own UnionPay. Yeah. But everywhere in the world you have Visa and MasterCard merchant service providers which are backed by a huge network which is institutionalized.
Yeah. And also recently we've seen Bitcoin transaction fees increase a lot, and that's a scalability issue. So as more and more people wanted to use Bitcoin for transaction purposes, either because they actually see the benefits for themselves, they're looking to invest, more and more people are using it, and it just doesn't have the capacity to support the general population.
That's right.
Which is why it remains an alternative.
That's right.
And this gave way for new cryptocurrencies like Ripple and Ethereum, the Ethereum network.
Indeed.
Which also has like slightly different benefits.
That's exactly what created that particular marketplace.
Yeah.
Because if you look back now at the Bitcoin mining, that difficulty to mine and increased cost was transferred to the cost of using electricity.
Yeah.
Bitcoin mining is extremely power hungry.
Yeah.
And it became an unviable business for a lot of smaller miners. So the irony of this is that those exact parts of the world where you have a lot of unbanked people, or a despotic government with capital control laws and which repeatedly plunders its people's bank accounts.
Those benefits basically made it unviable for those people.
They did. So now some of those countries have free electricity because of the control of the population.
Yeah.
So the funny thing is that the people who live there are now using the free electricity to get an advantage to mine over other places.
Yeah. So in general, my opinion is until these small kinks are ironed out, after then only will this be adopted by like the mainstream population.
I agree with you. Yes,
and
that's right.
I think that if those kinks do get ironed out, then it definitely will.
Yes.
And this is why I'm an advocate. This is why I'm a believer, and this is why I want to see alternative payment methods succeed.
I agree. If it's done properly and structured properly, and the infrastructure behind it is bona fide, then yes, why not?
Yeah, and there are all the benefits of transparency, because when you use your bank account, when you deposit money into your bank, it's only your word against the bank's after that. If they delete the record in their ledger of what you deposited, then your money is gone.
That's right. And in certain parts of the world, we've seen this in the brokerage industry. about 2 years ago, certain banks in tier 1 jurisdictions with tier 1 banks started refusing to open bank accounts for retail FX or electronic trading participants to keep their clients' money. So those brokerages, if the CEOs and the directors didn't have a British or American or Australian passport or European passport, they would be forced, they wouldn't be able to be onboarded by a European bank or American bank. So they were forced into the third tier banking system, which did exactly that. I know of several brokerages who put their funds in a third tier bank in Eastern Europe or in Georgia or somewhere, and the bank plundered their money, or there are also other circumstances where the security of the bank is lax, easily hacked. Hackers have got in, taken everything out, and the bank has said there's nothing you can do about it. That's the problem. So you are not protected by those particular third tier jurisdictions.
And then banking issues, like as you just mentioned, get extended to people who are involved in cryptocurrencies as well. For example, the Bank of Cyprus looks very unfondly upon us. And even me as a personal individual, I couldn't even do a SEPA transfer with Coinbase, for example.
Right. You know, that's an interesting point, because a lot of the banks have taken this particular view. But
I think it's because they're afraid.
They are afraid, but they're also unable to monitor anything. So they could be held accountable for somebody else's activities, and they don't have a framework in place to be able to do anything with it. They don't know how to do that.
They never will. They will never have the control unless they find a way to fully embrace blockchain technology and use their own distributed ledgers.
Well, that's what they're that's the misconception, isn't it? There's a lot of banks now involved in development of what is being called blockchain technology, but actually the misconception is that they're using it, which is the Bitcoin blockchain. What they're actually doing is developing their own completely separate distributed ledger systems. They're not making the Bitcoin blockchain in part of their services.
Yeah, they're not using Bitcoin because they don't control it and other existing cryptocurrencies. But at least they are trying to do something. There's a ton of value-added benefits that the average person sees from blockchain technologies, and the banks just don't offer this transparency. So if they started to embrace blockchain technology and could show every transaction that they manage to people who use their services, then they add that same added value to the common person,
Yeah, exactly. And actually that's interesting, because the added value aspect is being made even more difficult by abusers of the actual values on the internet. There's a site, isn't there, James? What's it called? There's a site which actually you look at the values of each
CoinMarketCap.
CoinMarketCap, that's right. If you look at CoinMarketCap, there are abusers of the actual CoinMarketCap by doing marketing efforts to try and ramp the prices to a fake price.
Yeah, there's a lot of schemes which I will do absolutely everything I can to keep away from my exchange and my business, because this is just bad press.
It is indeed,
and it's bad business. And a number of exchanges recently were exposed for actually fabricating their trading volumes just so that they can be seen as a big boy when they're not.
Yes, exactly, and that's done by that's a triumph of marketing over substance.
Yeah, and there's even secret groups, secret communities, whether it's in Telegram, whether it's in Facebook, and these groups they collude together to find ways through PR, through blogs, to basically drive value of these altcoins, these ICOs, these tokens, to drive value. So they buy in low and they collude together to do whatever they can to increase the value, so they can sell at a high price and leave everybody else with the aftermath and the problems afterwards.
Yeah, I agree. And actually what they're doing is they're making a fake price, ramping the prices, and then there's no way of checking it. So what happens is the algorithms at CoinMarketCap then go and look over those exchanges and then put them up at those prices. So you end up with a false capitalization value.
Yeah, exactly right. And things can fall, and there's no recourse for anybody who caused this.
None at all.
Just the few at the beginning who caused all of this make a little bit of money or a lot of money, and everybody else who joins the party later is left with the crumbles,
Yes, and there's absolutely nothing you can do about it.
Yeah, nothing at all.
That's the problem.
At the moment, there's nobody doing anything about it at the moment. I can see some exchanges are doing their best effort, but again, there's this conflict for them, because people come, they trade, they invest, and they make trading fees. If they're gonna push people away, then they lose revenue.
Yes, indeed.
But they just need to think what is important for the long-term business, you know?
Yeah, absolutely. That's right. So I think that's all. There must be a way of addressing that with some kind of algo that checks the actual genuine circulation versus what was the nominal values of what's been traded. There must be a way that this can be evolved so that ramping doesn't take place, because the ramping is a massive problem. It's something which can cause a disingenuity between.
And is actually, by the way, illegal in regulated markets.
It is, yeah, it is indeed. So
insider trading, etc.
That's right. That's what it is. If you did that on a US exchange, you'd go to jail for
yes, you would,
for false prices. So that is actually a very important thing. I really hope they address that.
Yeah, and that's the problem, is anybody can list an ICO without the proper due diligence.
Yes.
Or an exchange telling people, yes, we did the due diligence, and endorse it in some way. But exchanges have to be accountable for what they list on their exchange. And the real conflict is ICOs, people who are listing the ICO, the organizers.
Yes, absolutely.
They pay so much money to exchanges.
They do indeed.
And they give a percentage of what they earn as well.
That's right.
And they promote the exchange, and the exchange gets the trading fees. So they have all of this revenue, and it's just the exchange, they can be blinded by this money.
No, indeed.
So there you have it. The very first mobile-first cryptocurrency exchange, which has been designed and developed by genuine enthusiasts who hail from the same background as us, the electronic trading industry. Thank you for watching, and look out for more electronic trading developments very near in the future.